All right, everybody, market update. So S&P up here, what, 2580, 2600 now. That's could be a pause up here. I'll tell you why. Just speaking from a technical point of view, 2600 was a big level on the S&P. It took a long time for the S&P to break down through 2600. There were numerous attempts over the course of last year, 4 or 5 different tries to break down through 2600. S&P finally broke down convincingly in December, and now we rally back up around to this level. So what used to be support now technically has become resistance. So I would not be surprised to see a hesitation here. But it may not last very long. Next week, we get the start of bank earnings, and that's going to be very important. Now, first of all, going into earnings season, the expectations are very low, all right, including the banks. I'm not even talking about what happened with Macy's today, with the CEO said sales were a little bit weaker in the latter part of the holiday. Investors went crazy as usual. They sold Macy's stock down 20%. That's a buy. Okay, it's ridiculous. And this is typically the way people lose money. They see one comment, they react emotionally, they don't know what they're doing. Macy's stock is a buy. That's number one. Next week, bank earnings expectations are also cautious to, I would say, a little bit negative. Citi reports on Monday. All right, now, the work that I do in MMT Trader, which my subscribers get every week, a full analysis of the banking metrics, all right, that the Fed releases every Friday. And what I know and what we have been following is that the months of November and December saw a very significant acceleration in all the bank metrics. Acceleration up, a positive increase, a positive development in all of those bank metrics. October was the bottom. It was bad. It was very slow. The metrics were growing, but they were all growing very, very slowly. November and December, acceleration higher. Loans and leases, bank residual, which is a special term for assets minus liabilities. That's basically bank net worth. All that stuff accelerated higher. Bank assets, everything up. So I would not be surprised to see a better than expected bank earnings season. If that happens, all the financials will get a big boost out of that. And you'll see that S&P rise above the 2600 on its way to recapture the highs at some point, probably in the first quarter of 2019. So next week is critical. I wouldn't say it's critical, it's important. We're going into it with somewhat negative expectation. My work that I put out every week in the MMT Trader, where I specifically analyze all of these banking metrics, says it could be a surprise to the upside. All right, let's talk about the dollar. Dollar index back down in the 95 handle. You know, we've been going back and forth on this for months and months and months, rotating around the 95 handle. But we have seen a significant pullback from what, the high 97 level a couple of months ago. It was back in October or something like that. So back down in the 95 handle. Dollar once again resuming its downtrend as I said it would. I also put out some information yesterday on treasuries and the 10-year yield, what my forecast is. If you want to get that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader or a 30-day free trial of Zombie Trading. That's my daily Forex signal service. You can get both of those free trial, 30 days, at pitbulleconomics.com. And I will be coming out soon with a new options trading service. I think there's a lot of you have been asking me about that, so when it's ready, I'll let everybody know. So that's it for now. We'll see what happens. Remember, 2600 temporarily could be a resistance for the S&P. Ultimately, it will break higher. Next week, bank earnings. If it comes out strong, you heard it here from me first. All right, everybody. See you tomorrow. Bye-bye.